Hello everyone, this is the pre-market report video for today 9th October 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First about yesterday's Indian market, I guess it's just a technical bounce since it fell too quickly around 1400 points. In that it managed to recover around 200 points. So here I like to highlight a couple of things. The trigger for this technical bounce is mainly due to BJP's surprising election won in Haryana. So 12 out of 13 sectors closed positive, however, only metal closed negative. Regarding the reason, after 1 week of holiday, yesterday Chinese market opened crazy positive and closed positive of around 5%, which is okay. However, it appears the stimulus package which Chinese government announced earlier last week, now that either expect to become smaller or might get delayed due to the possibility of Trump winning the election. Hence, which in turn started to affect our metal share price. About institution, again for the 7th consecutive session, FII was net sellers in the cash market. Yesterday the net sold for 5,730 crore rupees and DI net bought for near 700 crore rupees. Then on F&O, there was not much of the rupee net value. However, if required, please pause and have a look. Those were the quick takeaway from Indian market. Then coming to US market, last night there was no major economic data scheduled to release. So individual stocks drove the early hour US market. Earlier yesterday in Taiwan, Foxconn's chairman in his business update, he mentioned that there was a strong demand for the Foxconn servers, which is using the Nvidia's new upcoming chip. So Nvidia stock increased over 4%. And in addition, Pepsi and Honeywell started the earnings seasons by reporting the good results which beats the market expectation. So all made the US market to open positive. Then in the night, for the first time in the last 1.5 years, Hezbollah released the statement that they were open for ceasefire, which in turn made the US market further positive and crashed the oil price by over 4%. In the end, in US, Dow Jones increased 0.3%, S&P 500 up by 0.97%, whereas Nasdaq increased 1.44%. Regarding US VIX, it decreased over 5% and moved to around 21.5 from near 23 on Monday. About oil, as we discussed, down 4%. At the time of this video, WTI crude closed at near $74 per barrel and Brent crude trading near $79 per barrel. Then in case of Indian ADR, in line with the Indian market except Wipro, all closed positive. So other than Infosys, no fresh positive movement, all indicating plus or minus 0.5% arbitrage, whereas only Infosys is 1% positive arbitrage. About GIFT Nifty, early morning it closed at 25,152. Finally, yesterday premium dropped to the sensible level 120 points. So equating that with the spot Nifty, it's kind of indicating gap up opening of 30 to 50 points. So that's what happened on the global market. Now let's move to the India specific info. The very important thing that possibly might drive the market today is this RBI's monetary policy meeting outcome, which is due at 10 a.m. Since April 2023 to the present day, in the last 15 months, RBI had the 9 interest rate decision MPC meeting. In all those 9 consecutive time, RBI kept the interest rate unchanged. So even today also, in all the news website, both local as well as international, roughly 80% of the economists expecting again for the 10th consecutive RBI to pause it. However, unlike last 3-4 times, this time Fed cut the interest rate by 50 basis points and consistently India's inflation on the last 3 months was below 4% and 20% of the economists expecting 10 to 25 basis point rate cut. So if the interest rate cut today by any percentage, I think it's positive for overall market. And for banks, I don't know how market will take this. See, generally when RBI cuts the interest rate, none of the Indian banks will jump immediately and pass the benefit to the customer. They always delay the benefits passing, and usually RBI wants the banks to pass the benefit, since in this way banks can increase their margin. Hence, in most cases, it's RBI's interest rate cut is beneficial. However, at present, the focus on the Indian banks is related to the deposit growth rate. So cutting the interest won't do favors for the deposit growth rate. Hence, honestly, it's difficult to judge the bank's price action. Anyway, in addition to the interest rate decision, in the MPC meeting press conference, RBI governor will discuss about the RBI stance, present financial year GDP growth target, and inflation projection. So, all those macros value will influence the market. For example, the present RBI stance is withdrawal of accommodation, which means RBI is ready to cut the interest rate, but if they change it to neutral stance means then it's not good, since that referred as can be interest rate cut or increase. I think they will cut the interest rate and will change the stance to neutral. Let's see. As a summary, because of possible ceasefire, global momentum is good now. So US market closed positive and GIFT Nifty indicating a gap up opening of 30 to 50 points. However, as I said, RBI MPC meeting outcome expects to drive the market. As per stock open interest, SAIL, Godrej Properties, SBI Life Insurance, ICICI Bank, Power Grid and National Aluminium got an increased open interest along with a negative close indicates the short bell tap. On the other hand, MCX, Lalpath Lab, Voltas and IPECA Lab got an increase in open interest with a positive price close, which means these stocks got the long bell tap. Then regarding the things to look out, as I said earlier, RBI meeting outcome. Other than that, at 11:30 am there is a schedule for release of Germany's trade data, and in the aftermarket hours, US Fed FOMC minutes and crude oil inventories are some of the items we need to keep an eye out today. Coming to technical, Nifty opened 40 points gap up and rebounded for the first time in the last 7 sessions, then closed above the psychological 25,000 mark. Thus on the daily chart, Nifty formed a medium green candle with minor upper and lower shadow, and finally it broke away from the lower low formation it had in the previous 5 trading sessions. And if we combine the last 2 trading sessions, it formed a bullish harami pattern. Generally, this candlestick indicates that control is shifting from sellers to buyers and also signals the ending of bearish trend. However, at present, Nifty still trades in the lower band of the Bollinger Band, below the near-term support trend line and below 10-day, 20-day and 50-day moving average, both simple and exponential. Here, Nifty has to cross the middle line of the Bollinger Band and short-term rising support trend line. Both coincides around 25,500. Until then, we can't say the bullish reversal is complete. Rather, it's just a technical bounce. As we discussed, 25,000 mark is the key and the important psychological level. Breaking below again and again will weaken the 24,650 to 24,850 support zone. Anyway, the immediate upper resistance is at 25,350 to 25,400 range, and on the downside, the immediate support is at 24,850. Then, in case of Bank Nifty, after 6 days of negative closing, yesterday it opened 260 points gap up and bounced back to above 51,000 mark. Thus, on the daily chart, Bank Nifty also formed a short green candle, and combining the previous day candle, it also formed a bullish harami pattern. This, along with the hourly momentum indicator positive crossover, is the significant positive sign and an indication of buyers coming back to the market. However, until it closing the gap it formed between 1st October and 3rd October, 52,500 to 53,000 mark, we can't say the reversal is complete. In addition, at present it trades below 10-day, 20-day and 50-day exponential moving average. Hence, in the near term, the support zone is at 50,250 to 50,500, and on the upside, the immediate resistance is around 51,500 to 51,750 zone. Regarding the weekly options data, the maximum call option open interest was at 26,000 strike, followed by 25,500 and 25,000, with maximum new call option rating at 25,000 strike, followed by 25,200 and 25,300. On the put side, the maximum open interest was at 24,000 strike, followed by 25,000 and 24,500, with maximum new put option rating at 25,000 strike, followed by 24,000 and 24,750. Thus, from options data, it's indicated that 25,000 level is likely to be crucial for the market's further direction. The 25,300 to 25,500 zone is likely to act as a key resistance, while support is at 24,750. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.